Let's take a look at some headlines, charts, figures, graphs, and more on Bitcoin for Brave New Coin. It's going to be a long one, so like, dislike, comment, share, subscribe. Let me know what you think about the video below. So we've had an onslaught, a barrage, a deluge of news over the past month. This is Feb 8. This kind of started us off-ish as far as news events. This one wasn't even talked about very much. It's just, we're just throwing billions here, billions there. Everybody around the world at this point has wisened up to the potential store value power of BTC. And it clearly is showing as more and more traditional legacy institutional players are doing things with Bitcoin. CME is offering a micro Bitcoin future. They have an E-mini, they've had oil mini, they do a lot of mini related stuff market-wise. This definitely encourages just more participants because the current Bitcoin contract on CME is 5 BTC per contract. And that's obviously getting quite large on a notional value. More of an institutional contract than a retail contract. This will be more retail focused because it'll be 1/10 the size of one Bitcoin. You can buy a fraction of a contract soon on May 3rd. So that'll be another fun thing to follow, those expiries and whatnot. We've had PayPal, we've had Visa. I don't even know what Dapper Labs is, but sure. At this point, none of this really is super surprising. It's the inevitability of a bull run where you just get nonstop. Everybody just wants to be a part of the bandwagon sort of situation. The Teletubbies, the Goldman Sachses of the world, whoever, they just want to add a place to play in the playground at this point. They're seeing everybody on the jungle gym and their clients are like, I need to get on that jungle gym. So Goldman Sachs is like, okay, let's get on that jungle gym. And here we are. BlackRock as well. So at this point, there's going to be fewer legacy players not involved than involved in some way, shape, or form. JPM, the list goes on and on. All the big banks all over the world are going to start to play in the game. That doesn't necessarily mean things are going to be bullish. It's probably going to mean things are going to get more difficult. There's going to be a lot more volatility-ish in the near term, depending on how you want to view whale-type money sloshing around in the system. So use that mindset to potentially temper your expectations as far as, all of this is good news, right? This headline was from January 20th, but they revealed yesterday or the day before that they actually did buy the equivalent of like 6 BTC on CME or something. So, baby steps, I guess, right? If we look at hash rate difficulty has continued to increase since 2019, since forever. I mean, it's just nonstop march up and to the right. Again, this is just more investment into what ends up being security for the network, but for the miners is just a short-term ROI contract that they're using to then accrue value over time, ideally for them. They're hoping to, at the very least, I'd assume their expectation is a recoup of ROI and then some. So if they're still bullish up here while they're adding hash rate, they're likely assuming that they will see a price appreciation. That's how I'd read this. That's how I'd continue to read this. Even in, March? This was March 2020, and that's a blip at this point. We had a lower or a bigger dip between May, June. We had another dip between October, November. Some of this is seasonal with China and the rainy season and electricity costs and whatever. But the point is, none of that's really mattered, right? We just keep going up and to the right. If you look at the ASICs as far as profitability, at 4 cents per kilowatt hour, which isn't retail electricity, it's industrial electricity, contracts where the miners pay per quarter or something crazy like that. Like, this isn't like you and I's electricity costs here, but it's still very profitable for them, obviously. So we continue to see new miners being listed, being manufactured. So the shovel producers are confident they're going to be able to sell shovels. The miners are confident they're going to be able to mine profitably. It's a win-win for everybody. At the end of the day, the network is happy. Even these older miners, 2018, 2019, are still rather profitable, even past, at this point, their ROI, which I'm sure has been recouped. So The miners are fat and happy here, certainly. Now, if we look at inflation for BTC, it actually dipped into 1.5% below that in November, which I didn't even realize, which is nothing, especially compared to most other networks. Right now it's cruising somewhere around 1.8%, and this will continue to decline slowly until the next halving, but nevertheless, the sub 2% inflation is highly attractive to many legacy people looking at massive inflation potentially in the real world, right, in the fiat system. If you look at transaction counts and average transaction values, I didn't realize, but average transaction values are basically nearing all-time highs on the weekly scale, which makes sense with price where it is, but it's important to say, at the previous all-time high cycle, 2017, this is how massive those on-chain transactions were because fees were so high. And now fees are really nothing in the grand scheme of things for BTC, and we're still seeing massive mean transactions on chain. We just look at the transaction counts; those are declining, and I really don't think, maybe this is just my bullish bias here, but I'm not a big believer in seeing that we're going to see massive increases in transaction counts because exchanges have wisened up as far as using batching, using SegWit, using other means to clean up the commons, basically, so that we're working harder, working smarter, not harder as far as transactions are concerned. So we're sending less transactions that are much bigger than they otherwise were in Jan 2019, July 2019, all that. Some of that's price related, some of it's efficiency related. So I lean towards the efficiency side of things. And if we look at fees are certainly rising, or were rising, average fees. This is where average fees were in 2017 on the weekly scale. If we go to non-weekly, this is a daily scale. So they peaked at around $55 on average in late 2017, basically. Recently, they peaked around 31 on the daily scale. So yeah, fees are up higher than really historically ever other than 2017, but that makes sense when you look at block size, which continues to push past the previous 1 megabyte ceiling into the unknown fantasy land previously of 2 to 4 megabytes, which is the theoretical limit using SegWit. And at this point, if you're transacting with a company that doesn't use SegWit, what are you doing? Just get out of there. If they're not using SegWit, they're not being efficient. They're not giving you the cheapest fees available. It's just a bad deal for everybody involved. So, who you are, companies who aren't using SegWit for no good reason whatsoever. But we continue to see block size just get pushed and pushed and pushed higher and higher and higher. Average block size hit an all-time high in this month, a few weeks ago, at around 1.4 on the weekly scale. And on the daily scale, it peaked above 1.4. So blocks are getting fuller. Fees aren't exploding. Fees are creeping up. They aren't exploding. So we don't have like a scalability crisis here or anything. If we look at the mempool, again, we can see that fees are nowhere near basically where they were because how the mempool looks now and how it looked before. We still have a bunch of low fee transactions, but it's not filled with sort of garbage transactions, which was the case in 2017, 2018 when several entities attacked the network. So we're definitely seeing a large percentage of low fee transactions. This is SATs. So lots of low fee transactions, and these do get cleared eventually, or have been cleared eventually. And these are the fees. So that was Wait. This guy, I don't know how to say his name, but he recently changed his website. I'll say Joho. He recently changed his website. So that's me navigating it. But these are the fees now, and fees are, this 5 sat stuff is even getting cleared eventually. Here's a better depiction of fees. So that was Wait versus fees. This is fees, and fees are barely a blip compared to where they were 2017, 2018. And if we look at unconfirmed transactions, we peaked around 150K unconfirmed, and that's declined rapidly over the past few weeks. So all in all, mempool looks fine, fees look fine. Scalability wise, we look okay. If you look at active addresses in the fill here, continue to creep at or near all-time high levels on the monthly scale. On the weekly scale, very similar. Down slightly over the past few weeks, but we continue to push. So you can't be bearish on that. NVT in the line here has declined from almost all-time highs. Not, if we look at everything, all-time highs is like 200, but reality post 2011, 118 was the second highest for the 30-day NVT since December 2013. So if this comes down, it says there's more on-chain activity, or there's increasing on-chain activity relative to market cap, and that's what you want to see if you're bullish. So to me, this signals additional potential upside with NVT. I'm not a big fan of NVT, I never have been, but I'd rather see this declining than increasing if I'm bullish. If we look at MVRV, there's similar inverse metric of economic activity on chain. If we compare the previous all-time highs, look at where MVRV was and look at where it is now. People love their back testing. People love that question. Here it is, folks. Here it all is. So MVRV right now is around 5.2, something like that. So until we get above 7.5, then we're in overbought territory. We're in danger zone. Not quite there yet. So that again suggests potential additional upside. Puel multiple, very similar. This has to do with the notional value of daily coin issuance relative to the past year. So if that multiple goes above 4, then we start to get in trouble. 10, and we're in big trouble. And again, just back test it visually. All-time high, all-time high, all-time high, all-time high. You can see where this pulled back when the Puel multiple was where it was. And for me, I think about this as just miners cashing out because they're looking at these numbers, not thinking they're real, right? At some point when you're human, whoever gets a windfall of whatever degree, everybody's got a number, and this is a visualization of what that number is for everybody at these levels, depending on the block reward. Now that's how I rationalize this. So eventually the market just cannot support such a massive increase in notional value of coin issuance. So we're not quite there yet. So again, additional upside there. If we look at the UTXOs on chain and we focus on the 6-month UTXOs, again, historically relative to previous all-time highs. So these are coins percentage-wise of the total chain that have moved in the past 6 months. Previously, all-time highs were set at around 50% of the total chain moving within the past 6 months. So again, additional upside here seems pretty clear to me. And it's very likely that all of these signals will start screaming danger warning signals together when the next bubble high approaches, whether it be 100K, 150, 200, 250, whatever it is. This is another representation of everybody's got a number. This is when the hodlers stop hodling and start selling because everybody's got a number for life-changing money or life-changing value in their life, right? And this is a great representation of that. So when 51% of the network is moved in the past 6 months, then that's a very likely toppy signal. I haven't looked at this in a while, but the local Bitcoins in Paxful, this is like retail OTC type stuff, worldwide combined, has increased since mid 2020, but kind of stagnated in most countries. You can see where it was in 2017, 2018 versus now. Now there are a lot more exchanges worldwide. There are a lot different regulatory hurdles worldwide. India, some countries in Africa, all this changes over the years. But when we really get going, I expect even this to just ramp. And we're not quite ramped up there yet. Look at Google Trends for Bitcoin since 2016. Here's the previous massive all-time high in late 2017. And here we are now. So we're not even, despite all of the evidence, anecdotally that I'm seeing with the headlines, we're not even close to where we were Google Trends wise. So this is people looking for what is Bitcoin? Where do I get Bitcoin? How do I Bitcoin? That sort of thing. So we're getting there, but we're not close. I mean, this is another great proxy for how crazy is this bubble, this euphoria getting. This is regional here, but so we're close, but not there yet. All right, let's switch to technicals. This is the 2-year MA multiplier. So this is the 730 MA daily chart. So it's the 2-year MA. And then in the red here is 5 times this green line. And the white line is just the median that I've added as an additional support resist level. But the idea is this is the buy zone in the green here. Hit rate has been superb. Timing is relative. The important part for this specific indicator is time above or below these lines. So buy zone, sell zone. Something else I noticed is once we breach this MA multiplier, we typically have 3 to 4 weeks of absolute insanity. So we're not there yet. Thankfully, again, another way of saying we have additional upside. The multiplier is currently at 71, 72K. So if we breach that level, then things are just going to get bonkers, right? Historically, that's what's happened. You could argue some sort of rising wedge here, very similar to 2017 pre-parabolic upswing in Q4. We may see that in Q2. We may see that in Q4. Q2 might just continue to rise rather slowly relative to the multiplier. And then Q3 is kind of a dud. And then Q4 is where craziness happens again. Certainly possible. We don't have a lot of data points here, but two of the previous, however, 5 all-time highs have basically been Q4 or surrounded by Q4. So expecting a parabolic move in Q2 may be too much, but seasonality is still on our side for a bullish Q2. If we look at the Bitcoin weekly, now a lot of this isn't like hedging my bets as an analyst. It's like legitimately things I don't want to happen if, to muddy the waters. It's concerns versus things I'm watching for. If we look at 2017, again, we really don't have much to compare to the current levels. But if we look at 2017, this is the cloud. So we tapped the Kijun several times in 2017. We've really yet to do that in this run in 2020 and 2021. Currently the Kijun, the red line, is at 33K, somewhere abouts there. So what I don't want to see is a retest of that level. If I'm long up here, I do not want to see a retest of 33K because obviously that would be a massive drawdown or a stop out or whatever you want to consider that. We're still very far from these TK lines on the weekly. So that's concerning. They aren't as split as they were in 2019, 2018, suggesting oversold conditions. So when the weekly looks like this, then I'm very concerned for the bull trend. So again, not quite there yet. There's still a possibility that we hit 33K based on 2017. If we have a 2017 run up, I'd want us to hit 33K. But this looks so good on so many other metrics that it's hard to imagine how we would even get to 33K. If we look at the 200-day moving average, it's currently at 35. The median line of this pitchfork is currently around 30, 32, something like that. So there's a lot of support down there if things go south quickly. Otherwise, based on the pitchfork, I'd expect a test of the next diag up throughout Q2, which could be 6 figures by the end of Q2. I expect an R5 yearly pivot test by the end of the year, which is at 100K. So all of this is lining up rather nicely with 100K resistance. As far as expectations, I don't think at this point everybody and their mother's looking at this at that level. They really are. It's less than a 2x from here. It's obviously crazy, but at the end of the day, it's just a number. And if the trend looks healthy, which I think it does, it looks a little overbought based on the distance of the 15 to 200. We've supported at the 50 several times. Last time we touched the 200-day moving average, basically back in late 2020. Not a lot of volume support here on Bitfinex on the way down, so that's a concern. The fact that there's virtually no shorts here is a bit of a concern because we're setting ourselves up for massive long squeeze potentially. We are overweight longs here on Bitfinex, so the opposite of the inverse GME is possible here, where these longs get scared and start closing. That pushes price lower. Maybe that's one way we could get to 33K or lower. Again, not an expectation, but something you have to, if you're a real trader, you're thinking about where's my outs here, where's my stop losses, that sort of thing. Otherwise, this looks fine, right? Like, we're X percentage away from the 200, sure, but otherwise this trend has consolidated and looks like it's ready to go again. And an exemplification of that consolidation is the alligator EMA, which has crossed inside of itself 4 times now. The previous 3 times have led to bullish continuation. I don't think this will be any different. If we pop on the fractals here, this gives you a bullish entry currently basically at 60K. If you draw a horizontal from this candle, that's how you would trade this. And you can backtest this till you're blue in the face, but I'm telling you that the signals are quite excellent on the daily time frame as far as entries and exits. So your stop loss for any longs would be at 48 basically. The previous stop loss at 52.5 got hit, and now it's reset itself, ready to go again. So overall, this looks excellent to me on Alligator Fractal. Daily Cloud also looks pretty good. We've tapped the Kijun a bunch of times since 2021. So a bit of an oddity was just this free floating. Typically how this works is on the daily, especially, we either support on these levels or we don't. We don't usually float in between them. So I was a bit concerned leading into that CME rollover that we would want to tap the Kijun, but we didn't. So, maybe I wasn't bullish enough the next day, but when I see it breach the blue line, I expect a touch of the red line, Kijun. MACD is completely reset. You can see it went from bearish to bullish previously. It's going from bearish to bullish again. It's cycled a couple times here. RSI has reset as well. It's above 50 again. So as it stands here, I expect all-time high retests for sure. If we look at the 4-hour, if we look at chart patterns, it's been inverted head and shoulders city with the second one ready to test that level. On the 4-hour cloud, it's giving you additional entries as far as bullish Kumo breakouts. We just recently had a bullish cloud twist as well, so that it adds to the confidence of bullish strength here on low time frames. So really, all in all, everything's looking great. And if you want to see how I'm trading this on BTC versus ETH versus USD, you can pop on over to enzyme.finance. This is a non-custodial portfolio management tool run by me through Technic Capital. And you can see all the trades I take, when deposits are made. It's all super transparent. AUM, depositors, that sort of thing. Performance. So I'm confident that BTC looks great. ETH looks great too, but that's a different video. And all in all, buckle up because it's going to be a fun ride based on what I'm seeing for Q2.